Hey everybody, it's Daniel here from InfoUs. Hope you're all doing well. So we talked about the Fed, the U.S. Federal Reserve last week. We talked about how they basically gave the green light that they see 3 rate cuts next year. But then after we got a little bit of pushback from some Fed members saying that, oh, we didn't really talk about rate cuts, and some saying that, no, 3 is maybe too much, maybe 2, and the markets were just kind of bouncing up and down all over the place. However, after some of these little comments came out, the market still, reversed and still rallied, and especially today being Monday, we do see that now that the markets, the equity markets, are rallying way ahead and completely brushing off, whatever the pushback was from few Fed members, right? And now, also on top of that, we had the European Central Bank (ECB) come out and also push back a bit, saying that we're not done on inflation; it's way too far. We're not, really thinking about cutting there. Most importantly, also, which I'll talk about today, Bank of Canada, right? Macklem coming out and saying that it's too early to be considering rate cuts. Now, this article comes out from Bloomberg. I'll post the link in the description so you could read up on it. But it's very interesting to see that, Bank of Canada being against, if you look at Bank of Canada versus the Federal Reserve, they were the first ones to hike rates. So you would think that they would be the first ones against the Fed to cut rates, right? That's what you would think. But actually, you're seeing a little bit of a reverse here where you're seeing the Fed, even though they were a little bit later to hike rates versus Bank of Canada, talking about rate cuts. And now Bank of Canada is kind of pushing back on the idea of some sort of rate cuts to come in, right? And the Canadian bond yields, they were coming off quite a bit with the U.S. bond yields. But on Friday, it picked up a little bit, especially after Macklem's comments. So, couple of paragraphs I'll just summarize here. It says in this article, the Bank of Canada's top official said policymakers will consider cutting interest rates when inflation is clearly on a path to 2% target, but added that it is still too early, right, to be doing any rate cuts. We're talking about it. In a speech Friday, Bank of Canada, Tiff Macklem said that once officials are assured that price pressures are on a sustained downward track, that they will be considering whether and when we can lower our policy rate. Macklem also said, I know it is tempting to rush ahead to that discussion, but it is still too early to consider cutting our policy rate, Macklem said in Toronto. Answering questions from reporters after the speech, Macklem reiterated that governing council is still prepared to hiking borrowing costs further if needed, but noted that officials increasingly view interest rates high enough to bring inflation to heel. So he basically said that if we have to, we're going to hike rates still if inflation is not coming down, right? And but he did also throw in there and say that officials are increasingly view that interest rates as high enough to bring inflation to heel. So basically considering saying that officials do think that, they're in restrictive territory. So here in the next paragraph, it says, the members did agree that the likelihood that monetary policy was sufficiently restrictive to achieve the inflation target had increased. Right, basically saying that it's most likely in restrictive territory to bring inflation down. Right, so you could read up on this article further, but I'll stop here because I'll just tell you a couple of things. So here's the thing with central banks out there, they're all globally coordinated. Okay, and especially with the Federal Reserve, right, that has completely went the other way, right? We heard them that they were basically talking about higher for longer, etc., right? Every single time, higher for longer, and all of a sudden they completely flipped to now start talking about, oh, we need to now ease a little bit. We should think about easing, cutting rates, etc. So it makes you think that what has changed in the span of just few weeks for the Federal Reserve. Now, for Bank of Canada, on the other hand, right, they're pushing back. The ECB is pushing back. Why? Why are they doing that? Because the Fed it is basically doing their job, right? They basically set the narrative for all of these central banks out there because, the theme out there, the sentiment is that, oh, look, the Fed is starting to get dovish. That means obviously the ECB and the Bank of Canada should be getting very, very dovish as well, right? But that didn't happen. So because of that, you can argue that, whatever the Fed has done, it's kind of doing their job for them. And that's why they want to push back and not cause yields to really drop too much, because they still want tightening conditions to bring inflation down. They don't want to over ease or ease too early because things could get worse off, right? So that could be one issue there for Bank of Canada and for the European Central Bank, which is why they were coming more on the hawkish side of things. Now, at the end of the day, right, if you look at all of this and you look at what the Bank of Canada said, even though they said they were pushing back a bit, they did also say that, they think that many of the officials think that, Canada's their interest rate policy is at restrictive territory. So the thing is, at the end of the day, since they're all globally coordinated, when one starts to cut rates and when things start to come in terms of interest rates go lower and lower, the others will follow, right? And like I said in my previous videos, right, don't think that cutting interest rates necessarily means it's an amazing thing, right? Like I said, like I just mentioned, that why all of a sudden the Federal Reserve went from the narrative of higher for longer, touting this and pushing that narrative constantly, to all of a sudden start saying, oh, maybe we do three rate cuts. Let's not forget that the Fed also came out and they penciled in September that we were expected to see a rate hike this year, right? And we didn't get that. So we've seen that the Fed has been wrong multiple times, but it makes you really think that why all of a sudden we are flipping here and talking about rate cuts, and it makes you think that is there something that they see that they worry about, right? Which will also, not only affect the US markets, but it'll affect Canada, it'll affect Europe, it'll affect the global markets as a whole. And that's when you're going to get the global central banks out there, right? Everyone to be globally coordinated, where everyone will start to cut rates. Why? Because the recession will start to show its true teeth, during that time, right? So either next year or let's say 2025, depending how early or how this rate hike cycle impacts the economy, right? So we will see how that plays out. But in terms of Bank of Canada, right, we for sure know that they have been in pause mode. They are still in pause mode, and unless inflation really picks up, then they can go for another hike. If not, it's very likely that they will also transition and start talking about rate cuts. It's a matter of time. And again, I'll repeat again, don't think rate cuts is a beautiful thing. I see the narrative online, on TikTok, everywhere. Every realtors out there pushing out, oh, rate cuts coming down, right? Are we gonna see 2021 all over again? 2020 COVID time, where all these housing prices were skyrocketing like crazy? I don't think so, especially if there's a hard landing, and especially if the unemployment rate's going to go up, there's going to be job losses, and if this ends up being a typical hard landing recession, nobody's going to be rushing out to buy a home. Everybody will be rushing to get some sort of safety net, some sort of income, some cash, something to withstand whatever is to come, whatever the credit event, whatever the recession is, likely to come. So we'll see what happens from this. Don't get to your hopes up on soft landing narrative. Although I could be wrong that we do Powell does engineer a soft landing, but gun to my head, I think the probabilities are very low. So I'll if I have to in a year or so eat shit for whatever I'm saying, I'm happy to do so, but I still stand on the narrative of hard landing, and I still think that cutting interest rates doesn't necessarily mean it's a good thing. Sure, down the road, when they do emergency cuts and they start doing QE and whatnot to pump the markets, sure, you could see a nice rally, right? Just like we've seen in previous cycles. This is all a cycle at the end of the day, right? But initially, when they start doing those rate cuts and they start panicking because of something, I don't know what, but because of something, then I don't think that's a good sign, right? Anyways, you let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.